Hello everyone, welcome to a new episode of Trade Insider, a podcast series brought to you by the International Chamber of Commerce Academy. My name is Priyanka Satapathy and I will be your host for today's session. Being the educational arm of the International Chamber of Commerce, we offer professional certifications in regulation and compliance. And one of our professional programs include the Certificate on the Common Reporting Standard, the CRS. For today's episode, we have with us Xiangyu Wang, Director of Regnology Singapore. The Academy, in partnership with Regnology, had launched the CRS certificate, an industry-validated certification that helps financial institutions understand the key elements of the CRS and how to incorporate them as part of a holistic compliance operating model. In today's episode, we focus on what is the CRS, why tax authorities across the globe are adopting and benefiting from the implementation of the regime, some of the best practices, and how can we learn all these through continuous professional development. Xiangyu, thank you for joining us today. A warm welcome from the ICC team.
Hello everyone, my name is Xiangyu and I work for Regnology Singapore. It is really a pleasure for me to join here today with Priyanka on today's CRS podcast.
So let's start the podcast with the basics. What is Common Reporting Standard, the CRS, and what issues does it address?
So Common Reporting Standard is a tax transparency regime introduced by the OECD since 2017. The purpose of it is to allow jurisdictions across the globe to come together and work together to address tax evasion. So tax evasion is I would say, a huge topic that is occurring in a lot of countries, which previously, before the CRS comes into life, governments and jurisdictions have little, I would say, tools to tackle it. Because if I am a rich Singaporean, I hide my assets overseas, the Singapore government, the tax authority, wouldn't be able to see it. Now, after we introduced CRS, the financial institutions in all the participating jurisdictions are obliged to submit the data related to especially foreign people's assets into the local tax authorities. Then the local tax authorities will exchange such information with corresponding tax authorities in other jurisdictions. So in this way, an automatic exchange of information is established, and each jurisdiction will be able to receive information related to its own tax residents holding offshore assets in another jurisdiction. And then based on that, it creates a lot of transparency, and therefore it addresses the tax evasion problem. So from now on, when the CRS is live, if I'm trying to hold any asset across the border in let's say another jurisdiction, the information will be exchanged back to my local jurisdiction so that I can't really hide it anymore. And that's the purpose of having Common Reporting Standard, and that's how it addresses the tax evasion issue.
My next question is, why are tax authorities across the globe adopting the Common Reporting Standard, and how exactly does the regime benefit them?
Yep. So, of course, addressing tax evasion is the main goal there, right? Creating this transparency and then tackle the tax evasion issues, because it is considered illegal in most jurisdictions. And as a side effect, it brings in a lot more additional tax revenue to the jurisdictions, especially, in the past few years. I would say jurisdictions are spending a lot of money in, tackling the COVID-19 challenge. So it is quite necessary to bring in additional tax revenue and ensure that the tax revenue could cover a lot of these costs. So I would say CRS is helping tax authorities in bringing these additional tax revenue. And as another side effect, because of the transparency it creates, it is also encouraging people to voluntarily disclose their offshore assets to the tax authorities. One typical example that we're seeing in the market is that once, the CRS has been established, some of the private banking clients, in offshore centers start to ask questions about what has been reported under CRS, and they would ask for their statements to disclose to their local tax authorities. So that's a good, I would say, a benefit that CRS has brought to the table, right? Additional tax revenues, whether through, reviewing previously hidden assets across the border, or voluntarily disclosure to the local financial authorities. So that's the benefit it brings in.
The Common Reporting Standard has been developed in response to the G20 request and approved by the Organization for Economic Cooperation and Development, the OECD Council, since mid-2014. How many jurisdictions have committed to this regime?
Yes. So far there are already over 100 jurisdictions around the globe has joined CRS, and this number is still growing. So one of the latest development we see, especially in Southeast Asia, is that Thailand has committed to start the CRS data exchange in 2023, which means in this year, the Thai government is most likely approving the legal basis of CRS. So we need to introduce a law to ask financial institutions to submit data to the Thai Revenue Department to allow them to exchange the information. So as you could see, it's really covering most major jurisdictions, especially, offshore banking centers across the globe, with one exception of US. Why? Because United States has their own version, which started earlier than CRS. It's called the FATCA. And FATCA is also an automatic exchange of information regime that asks, offshore financial institutions to submit data to the US IRS. And actually, I would say OECD was inspired by the benefits brought in by FATCA to develop this international version of exchange of information, which we now known as a CRS. So if you look at some data, right, it's really growing pretty fast since it went live in 2017. At the first exchange in 2017, there were around 50 jurisdictions, and it quickly expanded now till 100 plus within the next few years. And the assets or the assets that were exchanged within CRS has also grown very fast, like tenfold in 2 years' time. So CRS is really growing pretty fast, and we're still seeing new jurisdictions joining CRS as of now.
Okay, Xiangyu, you might feel this is a tricky question to ask, but do you feel the CRS has been successful so far?
Well, I would say largely yes. Of course, such a, I would say, global scale regime will face its challenges, especially in implementing in each jurisdiction, and there are some, I would say, local flavors added to the regime. But largely, I would say it's a successful story so far. If you look at the some stats, right? In 2017, the assets that were exchanged under CRS is about 1.1 trillion euro. That's already a big amount, but that was only the first year. In 2019, it has grown to about 10 trillion euro. So that's a huge amount that covers, I would say, a lot of the offshore financial assets. So it's pretty good. And then if you look at the result it brings in, right? Since the commencement of the AOI, the CRS, it has contributed to 112 billion euro of additional tax revenues, including, of course, tax itself, but some interest, penalties, etc. So this has really enriched the income of a lot of the governmental bodies across the globe to help them, bring in more tax benefits into the jurisdiction and tackle tax evasion. And on top of that, there were at least 3 billion euros of these additional tax revenues is linked to the direct use of the information exchanged. So I would say it's largely successful, but of course it has its own challenges, right? Each jurisdiction has its own flavor of CRS, and therefore sometimes the financial institutions find it a bit challenging, especially those multinational financial institutions, I would say, because you need to comply to the local requirements of each jurisdiction that they have presence in. So for example, the Singapore way of CRS is slightly different from the Hong Kong way of CRS, and is slightly different from the, let's say, China way of CRS. So to deal with these kind of differences, I think for financial institutions, it will be quite important for the compliance team. But on top of the compliance team, also the front office and the operations, etc., to get familiar with the concept of CRS and understand what exactly is required under the CRS to be compliant. Because this is not just about a small reporting, right? It really affects from client onboarding to the whole client life cycle within the journey, right? So I would say it's largely successful, but financial institutions might face some challenges when implementing CRS.
Okay. We do know that all reporting financial institutions in participating jurisdictions are subject to the Common Reporting Standard. My question is, what challenges do the financial institutions face to be compliant with the CRS?
Yes, that's a good question. It's a follow-up of my previous topic. So CRS has a few, I would say, components that you need to take care of. So first of all, the financial institutions need to apply this CRS due diligence process. And this process is not trivial, right? Because it really follows through the whole client life cycle within the financial institutions, from onboarding, then later on you have change of circumstances, and it differs based on the type of client, right? Whether you are a new client onboarded after CRS went live, or you have a pre-existing client, and the process is different between individual clients and entity clients. So it is not a trivial process to implement, and it impacts really the overall financial institutions. So your RMs, the relationship managers, need to understand CRS to implement this. Your compliance folks need to understand what CRS is to give, instructions or to set up the processes. Then the operations team needs to understand the data perspective of CRS. What are the key data that is needed? How to determine the client is reportable or not, etc. So the due diligence process is quite impactful throughout the FIs. That's one challenge. The other challenge that we have seen through our clients as well is data management, especially related to pre-existing accounts. Because, CRS has been live for less than 5 years' time, right? So I would say the vast majority of the accounts that we deal with is pre-existing accounts. And for pre-existing accounts, one problem is that at the time of account opening, you might not be obliged to collect the data that is required under CRS at the moment. So a lot of data remediation work is needed. And especially for those old accounts, might not be easy to, get the data that is required. So that's remediation work is quite a challenge as well. And then the next thing is reporting. So far we've been talking about the due diligence thing, how to manage the data. But after the data has been managed in the financial institutions, FIs are required to submit a report on an annual basis to the local tax authorities to enable them to exchange the data, right? So reporting itself is also challenging. Since the introduction of CRS, the reporting format has been, I would say, constantly evolving. It's a thing that is evolving itself, right? So there's and the reporting format is usually something called an XML format, the extensible markup language. It's a technical format that enables transmission of large volumes of data. So I would say managing this XML file schema is also a challenge because it evolves. So you need to update your reporting solutions or your IT infrastructures to ensure that it supports this evolution. And I think last but not least is the knowledge. Even after CRS has been live for, let's say, 5 years now, our observation is still that the knowledge of CRS is sort of limited within the financial services industry, usually because there's a dedicated team working on CRS, and then this knowledge is sort of retained within this small working group. When we deal with, for example, the challenges that we mentioned earlier on, the due diligence, the data management, the reporting, etc., it is always that group of people that drives the process. But sometimes we think it'll be helpful if, more people could be familiar with CRS to ensure the process of CRS is managed smoothly within financial institutions. So knowledge and training is I would say, also a key pain points that we're seeing nowadays in the financial institutions.
As an industry expert, can you suggest how can financial institutions address some of the challenges that you just mentioned in implementing the CRS?
Yeah. So what we usually recommend is that, first of all, let's get the processes implemented properly, right? So you need to build up a proper process for your due diligence and reporting, because these two are the main pillars of CRS processes within financial institutions. How should the due diligence be performed? Who should it impact, and who should input throughout these processes, right? So building up the processes would be quite important. And then on data management that we mentioned earlier on as well, we usually recommend financial institutions to implement some reliable data management tool to ensure that the data is done properly. Because throughout these years, we've seen in the market lots of financial institutions, they know about the due diligence processes, they know about the reporting requirements, but because of the data has been sort of a bit messy, it really impacts their reporting quality. So then there's a lot of back and forth between the FI and the tax authority about the data that has been submitted, right? There are rejections and follow-ups, resubmission that goes on and on for quite a while already. So implementing reliable solutions to manage your data on reporting is quite crucial. So it really saves the financial institutions lots of time in dealing with the interfacing with tax authorities. Then, of course, we need to ensure sufficient training and knowledge retention within the team, right? Because if only within the financial institution, only a small group of people know CRS, the rest are not familiar with the concept, then it becomes a bit challenging, because this group of people know CRS, but they cannot, oversee the whole processes. It really impacts your relationship managers, your middle office, your back office, and even your IT team. So it simply doesn't work if there's only a small team that knows CRS well. So I think it's quite important to ensure that within the financial institution, this knowledge about common reporting standard is shared within the whole team.
Excellent. So this is probably the most important section of the podcast, best practices. Could you share with our audience today some of the best practices for implementing the common reporting standard?
Sure, I'd be happy to. I would like to share maybe a case study that a large multinational financial institution that we worked with. So this international bank has established a sort of centralized model for CRS and other regulatory reporting, tax reporting regimes as well, including FATCA, the US version of CRS, and QI, the qualified intermediary, also a US regime. So I would say the success story about this bank is that because they have centralized the processes of CRS, FATCA, and QI, they're managing this quite efficiently from one central location and a center of excellence. Although they have presence over 60 plus countries across the globe that we have to cover, but number one, they are trying to centralize the data that is required for the reporting, for CRS reporting, right? So from a data perspective, the data management is executed quite efficiently. If there is any, data quality issues that we need to go back to the local team to re-massage the data, right? These processes are quite efficiently managed because every time when we try to load the data into the data management tool, the solution churns out a report and say, hey, you have, let's say, 1,000 data points that are having issue. Please go back to the local data owner to understand how to fix these problems. So that's number one. Number two, from a process perspective, because of the centralized model, it has eliminated a lot of the overheads, especially in local management of the CRS processes. We just need to understand from a central perspective, how should we manage the CRS program across all these jurisdictions, rather than in each country, over 60 countries, set up its own program for managing CRS. It's much more efficient. And then I would say also from a knowledge retention perspective, we trained up a group of experts in the central management team as well as the Center of Excellence. So these people, a team of at least 30 people, understand CRS very well. And then when they need to go back to the local jurisdictions across the globe, they in turn can train the local team in CRS knowledge. So they are so well trained that they can be the trainer itself. So what we call the trainer model. So from a knowledge perspective, we have been able to retain the knowledge of CRS pretty well within the bank. So even if there are changes within the team, it is pretty easy for us to train up the new joiner and retain the knowledge within the bank. So that's, I would say, a pretty success story about this multinational bank. So if you look at what they did, right, it's mainly tied up with what I've mentioned earlier on in the previous answer. You need to build up the proper processes, right, for whether for due diligence, whether for reporting. You need to implement data management solutions, right? In this case, we have a pretty good data management tool implemented in the bank. And last but not least, we need to ensure sufficient training and knowledge retention, which we have already built up a team of experts within this large bank.
Okay, great. Now, let's talk a bit about training and development. The ICC Academy, in partnership with Regnology, unveiled a professional certificate on the Common Reporting Standard. Designed for compliance, finance, and tax professionals working in financial institutions, this advanced level program provides an in-depth understanding of how to incorporate the CRS as part of the strategic compliance operating model. Could you talk a bit about the certification itself and why it is important?
Yeah, thanks. So this online training program was actually authored by Regnology. We have experts who have been working on the AOI or the CRS topic since its inception. So we have people that understand thoroughly about what is CRS and how it impacts the financial institutions. Yeah. And this program, it actually provides a very well in-depth explanation on the CRS compliance strategy. It not only talks about what CRS is, it also talks about how you should adopt CRS and how CRS can be implemented in the best practices, I would say. And I think one thing that I really like about this program is that it makes it interactive. There were lots of case studies that simulates real life examples within this e-learning program. So the user could apply directly what they have learned within the program, the text, the knowledge, into real life case studies to understand how CRS works. So that's really a component that I really like a lot. And of course, at the end of the course, we also have assessments and questions and answers to help the users to understand how well they have grasped the concept of CRS within this course. So I would say it's really a good course that can help, financial institution users, whether you're working on CRS or not, so long as CRS has an impact on you, whether you're a relationship manager, middle office, back office, or compliance folks, it is a good cause to take a look at and enhance the knowledge on CRS.
What is your take on continuous professional development in this post-COVID landscape?
Yeah, this is a good question. I think it's quite crucial for everybody to keep, developing skill sets in this post-COVID landscape. As you know, my personal observation is that one side effect of COVID is it probably is accelerating this digitalization across the globe. Now we have all digital tools to do everything, right? And people don't really have to physically be there to conduct the work. So I think it's quite important for everyone to focus on continuous development, on knowledge and skills to keep up with the pace, because it's going to be evolving only faster in the future. So we need to ensure that, continuous development is a focus after post-COVID. Yeah.
Well, we have reached the end of today's session, but I would like to touch base on the ongoing Russia-Ukraine crisis. Does the ongoing war have an impact on the CRS at all?
Yes, I would say, okay, this is just some of the implications that I could, think of. First of all, as we're, globally, people are applying sanctions on Russia, it is likely that jurisdictions could leverage on the data collected on, Russian tax residents who have financial assets in their jurisdiction to examine the effectiveness and the impact of sanctions, right? For example, under CRS, Russia is also joined as a participating jurisdiction under CRS. So it is possible that, when jurisdiction A exchanges data with Russia exchanges its own data with jurisdiction A, then this jurisdiction A would be able to understand, hey, how much asset are we holding for Russian tax residents in our own jurisdiction, right? And based on these data, number of accounts, number of people, the amount of assets, etc., we could assess, right, the impact. Is it efficient? How large is the impact on all these sanctions? So that is one thing. The other possible result is, recently in the news, we saw that some of the jurisdictions are sort of cutting ties with Russia on their tax compliance cooperation. So it could be that, some jurisdictions will say, hey, I'm stopping exchanging data with you, and then break this tie with Russia on CRS cooperation. It is also possible. And I think I've already seen one or two jurisdictions, especially in Europe, has announced some this kind of measures recently. So it could be that the war is impacting the CRS regime.
That was a very insightful session. Thank you very much, Xiangyu, for talking us through the entire scope of the Common Reporting Standard, from the challenges that financial institutions face while adopting and implementing the CRS to how they address them, and also why taking up an industry-validated qualification on CRS is crucial at this point.
Thank you, everyone. It's really a pleasure discussing the CRS e-learning topics today. If you have any questions or clarifications needed, please feel free to reach out to either ICC Academy or me directly. We'd be happy to have a chat. Have a good day.
For everyone listening to this podcast, if you like this series, kindly subscribe to our YouTube channel. And from all of us at ICC, have a great week ahead.